So interest rates are a topic that get brought up every day in our industry in this market. So today we're going to talk about some of the things that we're sharing with our buyers when they are looking at purchasing property right now. Obviously, rates have increased, and we don't know if they're going to continue to increase or if they've plateaued yet. So there's a couple of things that we definitely want to address. Probably the first one is that if there was ever a time to get your credit in order, it is now. Being able to secure the best rate is going to 100% depend on what your credit score is. So anything you can do to get your score as high as possible is going to help get your payment as low as possible. What I would recommend for sure is visiting with a lender that has some sort of credit score modeler system so that they can show you, if you were to pay down a certain credit card, or if you were to pay something off or open an account or close an account, this is exactly how it should affect your score and what you should do. Otherwise, you're kind of guessing. Another thing that's really important to consider right now is that you're right. We don't know. We don't have a crystal ball. We don't know if rates are going to decrease. We don't know when they're going to decrease. We would all love to sit here and say that we hope that we expect them to decrease in the next couple of years. So when you're qualifying for a mortgage and you're buying a home, if you're going to do some sort of adjustable product, so where your rate is fixed for 3 years, 5 years, 7 years, whatever that is, and then it adjusts after that, always make sure that you are comfortable with that higher payment, with the highest payment possible. That's really important. One of the other things that has been brought up a lot lately is like, you'll be able to refinance in a couple of years when rates decrease. But what if they don't? So I always work in worst case scenario, and I always like to give our buyers just all of the options. So one thing that is really exciting though, that some people probably don't know, aren't really familiar with, is it's called a streamline refinance. So if you have an FHA loan, a VA loan, you can, when rates decrease, you could do a streamline refinance, which essentially means then at that point you won't have to get an appraisal. You won't have the huge closing costs. It's streamlined. It's supposed to be super simple to refinance and get that rate lower. So something to look into for planning for the future. Probably the third thing, and not just the last thing, but one of the biggest things that I would say contribute to being able to purchase in today's market would be really saving the largest down payment possible. The larger down payment that you have, obviously, yes, the lower mortgage amount you're going to have and the lower payment, but more so the lower you're going to pay in mortgage insurance. And the reason that mortgage insurance is really important that you look at is how much are you paying. It can be really expensive, and if you can get down under 90% loan to value, gosh, I mean, especially when you get down under that 90% loan to value with a higher credit score, it's not going to hurt so much when you look at your payment and you see principal, interest, mortgage insurance, that it doesn't benefit you. It doesn't benefit you at all. It doesn't really benefit anybody until your loan goes into foreclosure. So being able to either save or figure out how to get the largest down payment possible is really important right now.